Good afternoon, everyone. You're all very welcome to Thursday's US market open for the US live trading session, which will begin in just under 10 minutes. We've talked about it this week, the kind of current themes, not really that much happening in terms of market dynamic. We're still seeing that risk aversion in the stock markets. We saw another bearish close yesterday, continuing that kind of onslaught of bearish price action. We talked about the seasonality, cyclical factor on Tuesday night as well. So all is really kind of abiding by that kind of ideology that we're kind of looking at this week and through the month of August of risk aversion, risk of weaker indices, and seeing that safer haven with stronger dollar play in the back end in the FX markets. So I suppose if we kind of first look at the economic calendar for today, I know we talked about it a lot yesterday in terms of the Kiwi interest rate, stronger than expected, or kind of stronger or resilient European growth coming in as expected, and obviously weaker UK inflation yesterday. The narrative today is that jobs markets, the weekly jobless claims still holding up fairly strong. The Philly Fed manufacturing survey coming in positive, better than expected. So broadly speaking, the few data points that have been out today have been a little bit better than expected in that regard. So that's obviously a decent thing for market dynamics, for those trading news, those trading really short-term time frames in terms of market volatility in that regard. So as we look at that, the broader team has been very much kind of cyclical, as we've talked about it yesterday. We looked at this 44.40, 44.50 level area. Yesterday, we had a little bit of chop and volatility between 2:30 and 3 o'clock, but really by kind of half three, we really did see that kind of elevation in downside price action in the stock markets. We saw the S&P move lower to create new lows again for the month during the Asia session. We have seen, obviously, the NAS and the Dow Jones also linger to the downside. And if we look at the Dow Jones and the NASDAQ separately, you'll see that as well visibly on the charts. Very, very clear sell-off through 35,000 in the Dow Jones, finding this bottom around 34,750, 34,800. So we're still seeing those kind of 250, 300 point sell-offs. Like in percentage terms, it's not really that much. You're still only talking about 0.8% to 0.8% to 1%. So the intraday volatility in terms of what we've kind of seen through April, May, and the early parts of June has really died off, as you see in August, because yes, we are more consolidated, we are more range bound. The daily moves are a lot more concise than what they would have been just a few months back. So we're really looking for that to evade through the end of August, really looking for a more normality in terms of intraday volatility, and really seeing those markets move a little bit more robustly like what we saw in, as I said, April, May, and in some of those earlier months in the year. So I suppose with that being said, as we said yesterday, we were really looking for that continuation in index or stock market weakness, and we're very much seeing that. Yesterday, as I said, 2:30, we had a big spike, very, very quickly unfolded, and by 4 o'clock, the market dynamic had really run off into lower lows into the close. And we saw that in the S&P, as I said, we saw it in the Dow Jones, and we very much saw it in the NAS as well. That clear reaction back into that point of control, as we talked about yesterday in the NAS, 5060 reacted very, very nicely off of point of control. And since then, through the course of yesterday, the market dynamic has moved progressively lower. Now, as we said, so we're looking at kind of the broader dynamics today. As we move to today, we are seeing that kind of dead cat bounce, that kind of dead cat recovery. We saw it over here Tuesday, should I say. We're getting that little bit of a short-term, little bit of a bounce in the markets. And again, that's brought about by the fact that we are seeing that little bit of a counter trend retracement in the DXY. So the DXY was fairly level bound, fairly consolidated this week. And of course, what happened yesterday with those indices ramping lower, we saw the DXY ultimately continue to the upside. So we're seeing that kind of cyclical correlation play it very, very nicely. Stronger dollar underpinning that indice weakness. And then when we get that initial, I suppose, rollover, that initial impulse rolling over in the dollar strength, dollar weakness coming back through, it's feeding back into some of those short-term recoveries. So with that being said, today into US Open, into, let's say, the end of today's trading session, it's really all going to be about how does the dollar react at 103? Because of course, yesterday we had that spike into 103.60. We took out the highs over here from the early parts of July. We've come back down into this short-term value area on the day. So if you're looking at the DXY today, You're seeing this value area really through yesterday, Tuesday, and Monday as well. Monday, Tuesday, Wednesday, this range around 103, 103.40, aggressive break to the upside, all the way back down into this value area. So we're really just determining, can we see that dollar weakness that we've saw through the course of the morning, 11 o'clock, 12 o'clock, 1 o'clock, 2 o'clock into the US Open? Can we see that actually reverse? Can we see the dollar strength cyclical flowing back in for further DXY strength? Or do we ultimately see the DXY try to break through these structure lows? So at this point in time, very much wait and see. So if we were to see the DXY obviously pick up strength, we would then be looking for the S&Ps to come back up, grind, react off of a value area, and then looking for that next grind lower. Okay. Similarly with the NAS, you look at it here, there's an area here around 15,000. I would be keeping close eye on that one on the NAS. If you look at the S&Ps, you've got an area here around 44.30, 44.35. I think you should be watching that very closely. And of course, with the Dow Jones, really liking to see if there's any sort of reaction up here around 950, 35,000. So that's really kind of seeing why, can we get those short-term bounces, clean out the liquidity in terms of the order flow, in both the stock markets, in both the FX play as well in terms of the DXY, and then just continuing the trend, right? Because we know the broader trend is at the minute risk aversion, as we said at the start of the call, lower low, lower high kind of order flow within stock market indexes, whether it's ETFs, whether it's individual stocks, whether it's the spot indexes that we're kind of looking at here. And then obviously we're seeing the similar story, but on the inverse on the DXY. New highs, bit of a pullback, new highs again, regressing back into those value areas. And then we're looking to see, can we get that pickup again in dollar strength off of those recent value areas? And that's something that I'll be looking at through the course of the afternoon. Haven't really traded this week at all myself in any way, shape or form, because it's all about quality, focusing on clear, I suppose, directional biases within the markets. When those conditions are met, then you enter. And I think that's really, really important when it comes to trading, particularly in the summer markets when you have tighter ranges. It's a little bit more choppy. It's a little bit more wicky. Markets tend to be fairly boring, fairly laborious, and you tend to see wicky movements as well. So you want to try and avoid that as much as possible. So that's really kind of where we are from a price action perspective. When you look at kind of the nuances between the buyers and the sellers in the market, when you look at the sentiment in the markets, those are the key things to be looking out for. Now, when we look at the order profiles for the day, just to bring that into consideration just as we finish this call, this is now logged me out, folks. Give me a second to see if I can log back in very, very quickly. I had it just a moment ago. Let's hope it hasn't stalled on me. Okay, lovely. Let me just reset this again. Reset the dates again. SPX 500. Okay. As we look at the SPX 500, you will see it there. Okay. So this was yesterday's value area, 44s, 44.40s, very, very clear reaction down into the 4400. Clear hold in terms of that selling bias at 4400. We got a nice little subsequent bounce. We are now holding moderately between yesterday's point of control and today's lows of the value area around 4400. So I think at this point in time, worth keeping an eye, as I said, up here around 35s, 36s, 38s. Can that market dynamic extend back into where we saw a lot of that selling come from yesterday? Because we know, we talk about it in other calls, what goes down must go back up. So really just looking for that inflection point, that turning point in market dynamics. Can we get value and precision in terms of those entries? And if they do meet, how does the price action react at those areas that we're kind of looking at? Okay. So that's the S&P there on that one. So as I said, keep an eye on that kind of 35 handle. That's kind of something to work out for, to see if there is anything kind of moving in that regard. S&P is around about the 20 mark at the minute. So we would need a little bit of a spike to get back into some of those value areas, but let's keep an eye on that through the course of the afternoon. Now, if we look at the Dow Jones, let me just type it in correctly again, USA 30, Dow Jones, as we said, around that 35,000 was going to be key. Very, very clear break yesterday from 34,950, just underneath 35s. Very, very clear sell-off. We find our bottom around 750s, 780s. And of course, today markets is kind of grinding somewhat. So as I said, keep an eye to see if there's any sort of spike into this 950s. And as you can see on the open, markets is getting a little bit of a bump. So I would look to see what we had yesterday. We had this massive bump, very, very quickly rolled over. Let's see if there's a repeat. Let's see if we can get a little bit of a bump, come back into yesterday's value area, play off of the liquidity zones, and then look for that A inflection, that A inversion where we kind of come up. And then obviously we look for the next wave lower. So keep an eye on that one. I think that's a prominent area to look at. And as I said in the NAS, keep an eye on this 15,000 level. We are still grinding up. The S&Ps is holding up. So the NAS, S&P and Dow Jones all aligning with that viewpoint at the minute, but a little bit premature if you're looking for kind of further additions into short entries. So if we look at the NAS as well, very, very quickly, bring in the profiles as well. We're sitting at 919 is point of control. We saw it yesterday, very, very clear reaction around that 15,000 level, just above the 15,000s. Clear sell off into 14.9s, 850s. 850s has been holding bottoms today. 900 is point of control, or just slightly above the 900s. And as you can see, the D prints is above point of control at this moment in time. So as I said, on the NAS, really keeping an eye out to see, can we get back up into this 15,000 level? Can we get back up? Now, as I said, that first 30 minutes, as I alluded to yesterday, is going to be pivotal. We had the spike yesterday at 2:30. But as I said, by 4 o'clock, we had a very, very clear idea of the directional bias as the market started to tail off. Yesterday, very, very similar. Around kind of 3:30, we started to see the stock markets top out. Then we ultimately moved lower into the close. And as I said, Dow Jones also very, very similar in that regard. We sold off from around about kind of 3:30 in the Dow Jones and ultimately moving lower. So that's kind of where we are today. So NASDAQ a bit mixed on the open. S&Ps is turned a bit mixed on the open. Dow Jones is still bullish in the open. So keep an eye on those value areas. The liquidity zones, I think, is important, but also looking at the DXY, because if the DXY selling starts to bottom out and we start to see DXY coming back in, that means your Euro USD shorts are coming back into play. Your cable GBP USD shorts could be coming back into play. Your dollar yen would still be holding up much of its bid. But then in the back end on the correlation side, we should be looking at stock market weakness. So do keep an eye on that through the course of the afternoon, because it certainly looks like that's where the market dynamic is heading into 2:30, 3 o'clock, and through the course of the US trading session. All right, so that's pretty much it, folks, for today. Just as I said, all eyes on those correlations. We've got our three value areas on the three indices: the S&P, the NAS, and the Dow Jones, obviously still holding its bid. European indices still fairly laborious, as we said. 15,700 is where the DAX has spent most of its week this week, particularly today, particularly yesterday. So not really much happening there in the DAX. Euro stocks, I haven't looked at the Euro stocks personally today, but if I look at it now, just very, very briefly, again, similar scenario back into those value areas around 42.50. So European indices are just holding in there. The FTSE has continued to drift moderately lower today as well. So we've seen that FTSE play continue to drift lower. But really looking just to see kind of going back to the US markets, can we see a little bit of liquidity, order flow within the price action? And then in terms of cherry picking some entries for potential shorts. And at this moment in time, patience, wait and see. Let's evaluate, because yesterday it didn't come at 2:30, didn't come at 3. It actually took a little bit after that. It was around about 3:30 before we really started to see that initial spike in the price action actually evade rollover for that sell-off into the close. So just do factor that into consideration. So worth keeping an eye on all of those three into the US session open. All right. Cheers, everyone. Have a great day.